Hello and welcome your tune into Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me today is Ritu Singh. Very flat for the markets as we speak. It's been quite volatile from the word go. But we do have the bank Nifty, which is slightly in the green, but largely a flatter start to the market, and the volatility continues as well. The PSU banking index is doing well. IT has made a comeback. It did that yesterday as well, and that continues to be the case today as well. In fact, we are getting a lot of conversation. So let's cut across to Parikshit, who is in conversation with former Niti Aayog CEO Amitabh Kant at the India AI Impact Summit. Parikshit.
Monitor the attendance of teachers. You can, really build competition on the basis of real-time data. All this was not feasible earlier. So AI gives you the power to really leapfrog in a very, very big way.
Right. How do you hope India will leverage AI for economic growth? The big conversation in every ministry right now is how to have a Viksit Bharat by 2047. How do we ensure that we use AI to have that consistent, sustained 8 to 9% growth rate year on year?
It's actually very important to understand that India can't grow at 8 to 9% per annum or become a $30+ trillion economy without empowering its citizens, without empowering 50% of its citizens, which are either wage earners or living on Manrega, etc. And what's important is that we are able to skill these people in AI. What's important is that we can use their talent and we can use the computing power to spread this. What's happening today in the United States, for instance, is that AI is driving growth, AI is driving investment, but increasingly they'll create a more unequal society. It's very important that we learn from our own lessons of digital public infrastructure, where we created the guardrails and we provided digital identity to 1.5 billion people, and we do fast payment, credit, stock market transactions, we provide insurance, all this to a vast segment of population, Tier 2, Tier 3 cities and rural areas. And therefore, to my mind, AI will remain unequal if we are not making it accessible, if we are not making it affordable, and if we are not making it multilingual, and if we are not touching the heart of India's population. India will grow at 8 to 9% if we make AI multilingual, if a person can speak in Malayalam, Tamil, Telugu, in its local dialect and use the power of AI. And more than the power of multilingual, but use the power of voice on text and really ensure that it is both accessible and extremely affordable. And that is what some of our young startups like Sarvam AI are doing, making it multilingual. So I think that is where the real power is. Secondly, I would say that it's important that, what is very critical is that AI is also a huge energy guzzler. So if America is driving it on the back of fossil fuel, India should really demonstrate its great ability to drive it on the back of clean energy. Today, AI is consuming more energy than what Japan consumes. If we have got a 70 to 75 billion worth of investments in data centers, it's critical for India to drive it on the back of clean energy, renewable energy, back it with small modular reactors, but really upgrade its transmission, its grid, its cooling centers, really to ensure that we are able to use. Right. India is climatically blessed. No other country has this ability, which India has. And therefore, to drive these data centers on the back of clean energy. But for that, you need to upgrade your transmission and grid and make it really smart.
Mr. Kant, do you feel that we're having enough focus on that? We're focusing on driving AI investments, driving investments in data centers, but making sure that they are running on sustainable fuel. Do you think we're talking about that enough?
So that's critical to my mind. It will be very difficult to do this without renewable energy. It's critical that we back it up with small, and government has taken several far-reaching measures. For instance, opening up the small modular reactor sector. But allowing private sector to come in small modular reactor, India must take the first mover advantage. Secondly, it's very, very important that we...
All right.
That is the Impact AI Summit that's happening in New Delhi, where we'll continue to get you big voices from the AI space. So speaking of AI, the big news today, of course, was Infosys tying up with Anthropic, and the sentiment gently turning. I mean, you're seeing the IT pack after a long time lending some support to the markets. It's in fact, the strong gains in the IT pack that is helping the markets today offset some of the losses that we're seeing in the metals and some of the other stocks. Apart from that, the PSU Bank doing pretty well in trade today. It's up about 1.5%, led by names like PNB, Union Bank, UCO Bank, Central, and others. Realty, Energy, Auto, these are some of the names that are still trading in red. But all in all, for the markets, the Nifty still down about 20 points as we speak, but the Sensex is in the green. But the good news is, the advanced decline ratio, the market breadth, still in favor of advances. That's where we have it. You have about 2 stocks that are advancing for every 1 stock that is declining. So let's get in Ria, who's standing by with a list of top stocks for the day and why they're reacting to some of the news that's come in to focus on. Ria.
Well, let's start off with Cochin Shipyard first. The company has been declared as the L1 bidder for 5 of the next-gen survey vessels for the Indian Navy. The total order value for this is rupees 5,000 crores. And at the end of Q1, the company's order book stood at rupees 21,100 crores. The next one is Texmaco Rail. This one is also performing well in today's session on the back of an order win. They received an order worth roughly 220 crores from MRVC for the Mumbai Suburban Railway Line construction, the execution period for which will be 36 months, and the order book for the company at the end of Q3 stood at roughly 5,660 crores. The last stock is TVS Supply Chains. This one is also up roughly 3 to 4% today. They have signed an MOU with Italy-based ALA Group to enter India's $28 billion aerospace and defense supply chain.
Okay, all right. Thank you so much, Ria, for joining us with those stocks on your radar. Let's talk about Ipca Labs now. Nuvama and Axis Capital, both of them are upbeat on the stock. Let's understand their rationale. My colleague Winnie is here with the details.
Hi, good morning. So yes, Ipca Labs today, that's the stock that is moving around in trade, and this is mainly after the con call highlight. Earnings were in line with expectation. Actually, revenue was a bit of a miss, but the margins as well as the profitability, that's where it was better. So overall, in-line set of numbers. Now, in the earnings con call, there were key highlights. One, they said that, the branded business, that contributed 50% during the Q3, improving the contribution by around 400 basis points on a year-on-year basis. Nuvama also is maintaining their buy rating. They've increased their target price to 1,750 rupees from previous target price of 1,610 rupees. This is the strongest margin that the company has delivered in almost 4 years. The Africa business, Latin business, that's doing well. India business, that's also seeing a healthy growth, and that is shaping up well for the company. Now, Axis Capital is saying that mainly this time the business mix, something that has driven the profitability of the company. Unichem performance is now expected to start normalizing in the next 2-3 quarters. That means the margins over there will start improving and supporting the margins of the company overall. For Ipca Labs as a whole, the company has also highlighted something very interesting, that they are evaluating in-licensing opportunities in GLP-1, and on the basis of all of this, Axis has also raised their FY27, FY28 EPS by 1 to 3%. They've raised the target price to 1,610 rupees as well from previous target price of 1,480. So some upgrades coming in here for Ipca Labs.
All right, Vinny, thanks very much for taking us through those details. Let's do one thing. We'll slip into a very short break. But up next, we'll focus more on the markets, the bond markets, and of course, we're standing by for the Infosys AI Investor Day conference. Welcome back. Infosys is holding its Investor AI Day 2026 today. Let's cut across to the chairman of the board, Nandan Nilekani.
This is a much more fundamental change to the way businesses will operate. So this is not a layer of technology. When we had, when smartphones came, we could build applications where instead of having a PC, you did it on the phone. It was like putting a front end to an existing application. When cloud came, we could do a lift and shift. You could take the app from your in-prem and move it to the cloud. So you could do a lot of things to get going. But this time, it's not that. This is a fundamental change in the way we do things. Obviously, there's a technology dimension, and it's all about having AI native architecture. But there's a whole business dimension to this. We cannot run business the old way. And businesses have to change, the customer journeys have to change, all those things have to change. It's a huge challenge for talent. Talent will have to deal with a world where writing code will not be the goal. It'll be actually making AI work, orchestration, and those kind of things. So the jobs will change. And operating model, how do we make this at scale? How do you get a firm with hundreds of employees to change all the things and make it work? And of course, our mental models have to change because we worked, technology was always deterministic. You said A plus B equal to C. So no matter how many times you said A plus B, the answer was C. In this AI world, every time you give a prompt, you'll probably get a different answer. And therefore, how do you deal with this non-deterministic world? But how do you make sure what you build has the robustness, reliability, and resilience of the deterministic world? That's what the challenge is for everybody. So this is a fundamental root and branch surgery of the way business is done, which is why this technology transition is so dramatically different from anything else that we have seen. Now, one clear learning we have is modernization of legacy systems cannot be deferred anymore. What happened over the last 60, 70 years is people would not replace the legacy systems, they just added to it. So if you go and look under the hood of a large enterprise, they will have mainframes from 1960, they'll have mini computers from 1980, they'll have LAN from 2000, they'll have all kinds of things, and all coexisting in silos. That is over. If you really want a firm to take advantage of AI, you have to fundamentally clean this up. So this is a massive, massive cleanup job which everybody is dealing with. There are reasons for that. One is the financial drain. Many large companies are spending 60 to 80% of their IT spend on maintaining systems. There's no business value out of that. They want to go from 60% or 70% maintenance and 30% new systems to 30% or 40% maintenance and 60, 70% new systems. They want to flip the way they spend money, but they can't do that with that fundamental cleanup they need. Moreover, many of these systems were designed in an era before you could have online attacks and so on. So security breaches, which you see every day, are just going up everywhere, and there are more state and non-state actors who are getting better at it using AI. So security is a huge problem for everyone. We have seen so many cases in the last few months. And because the data is all in silos, you can't even innovate fast. You don't have to be. So there are fundamental structural issues today we have. So demand side is absolutely demanding modernization. But the good news is, for the first time, because of AI, we have the tools now to do modernization fast and very quickly, and at a much more economic way. So we have a huge demand, and we have the ability now to do it, and perhaps our team will talk about that. So fundamentally, accumulated tech debt over decades must be paid. You no longer have the option to defer this. And this is a huge, huge requirement, and obviously it's a huge opportunity for us. Now, the other thing which is there is, as AI becomes a bigger part of the spend, the balance of advantage is moving towards build rather than buy. And that is actually what is, if you see some of the concerns about what will happen to SaaS companies and all that, it's because of this, that building applications has become so simple that very often you may just build, or you may replace something that you have which you bought and with something to be built. And so we are seeing, and that again actually benefits folks like us, because about building, who's going to build it for them? It's going to be us only who will build it for them. So fundamentally, it's good for us. And the other thing which is there is that our view is that foundational systems will increasingly become systems of record. But the interface will be agentic. Because agentic interface makes a lot of sense. Agentic interface allows people to produce something which is designed pro-consumer or pro-user. And agentic interface enables you to take out the complexity and hide it behind the agent, so the agent is simple to use. It's a very simple idea. Now, enterprises will therefore want to put agentic layers on top of all their applications, even if they leave the system of record the same. And that is something which will be a combination of bought-out agents as well as building their own agents, because finally, the agents have to be composable in a customer journey which is seamless, which is a mix of agents which are your own or from somebody else. Again, that requires orchestration and work which somebody has to do. So there's a huge amount of work required once they go towards build rather than buy. Now, the other thing is the pace of change is something which obviously we have not seen. We all know about the trillions of dollars being spent and all that. But even the technological change, I mean, 2023 Foundation Frontier model had 100 billion parameters. Today it has 1 trillion parameters. There are only 10 to 12 agent networks. There are 60 agent networks. So this is only going to go up. In the US alone, there are at least 5 frontier models. In China, there are big 4 or big 5. So this is only going to go up. In India, we have seen so much action, and you'll see some big announcements this week on Indian-based sovereign models. So I think this is something. Now, there are certain implications of this, because if I'm a businessman and I have to choose my technology, how do I make sure I don't make the wrong choice? Because something which I invest in today may have fallen behind tomorrow. Already people are facing this reality. And therefore, how do you architect your technology so that you can deal with this rapid change is a very fundamental and structural need for enterprises. And again, they need help on that from somebody who has done this in 2,000 locations and understands the pros and cons of every approach.
Okay, all right. That's the word coming in from Mr. Nandan Nilekani. We'll keep dipping into that conversation, the presentation at Infosys Investor Day. For now, we'll slip into a short break. Up next, we'll focus on the bond market with Manisha Gupta on the other side.
Welcome back. Markets are back in the green. And for now, let's just cut back across to the chairman of Infosys, Nandan Nilekani, talking about the AI transition.
How do you make sure that AI investments lead to real performance and productivity and not just some make-believe stuff? This is something which is very important. So what still matters? First principle thinking. One of the things when we train people is they have to learn to do this without tools. Because all of us learn to do this without tools. So when we got the tools, we knew how to use those tools better. But if you start by teaching them tools, then everything is a black box. Then, it's like the guy who never knows how to calculate because he was born with a calculator. So first principle thinking is very important. All the more important as you think about strategic transformation of large enterprises. First principle thinking is very important. Second, understanding enterprise context. Every company is different. Every company has a different legacy. Every company has different systems. Some of them have come from acquisition. Some have come because they have 5 business units all buying their own version of technology. All kinds of reasons. Everybody has a complex estate of systems. And context is essential to being successful at AI deployment. And each context is different. And it's the dealing with these contexts that is the hard part, which is where, again, we believe we have a way of doing that. I'll give an example. The self-driving cars. The first DARPA challenge was 2004. The first time they rolled out was 2007, 20 years back. Then everybody said, oh yeah, by next year we'll have self-driving cars. It's 20 years later, all we have is a few cities in America where there's self-driving cars. Because the context is different. Every city is different. Every road is different. And by the time they come to Bangalore, it'll be 2047. Because they're dealing with Bangalore traffic, it'll be a different level of context. So enterprise context is so important. And that is something which cannot be done by a tool. It has to be done by capturing implicit knowledge and making it explicit. Agnostic design. Again, what I mean here is don't let locked into a tool, because that tool may no longer be, it may be obsolete in 2 years. So how do you design for agnostic that you can choose any system? Getting the house in order. We talked about removing technical debt. We have to go make the house in order for this whole thing. And then massive change management. You're changing organization, business structure, people. I mean, this is like unbelievable change management. So unless you have leaders who can do effective change, nothing is going to happen. It's also about strong collaboration across firms. So firms have to, because all the knowledge is implicit in the heads of different people, how do you make that explicit in one customer journey? Focus on productivity. It's not about using AI tools. It's about productivity out of those tools. Otherwise, you'll get false productivity, which leads to more complications. And then this is an engineering game. AI engineering is a whole way of doing things. And that is part of your change management and transition that you have to do. And that's a big thing. So my view is there is no opportunity gap. If anything, the opportunity is bigger than ever before. So don't get distracted by that. You should still ask the question, what is the firm doing to take advantage of this? What is the firm doing to transform its talent for this new world? What is the firm doing to design the services and products for this new world? What are they doing to tell the customer in a way that it resonates? What are they doing to make sure that the front-end conversations with clients are done properly? These are all the issues. And I'm sure everybody will not execute the same way. So there is an execution risk in doing that. So it is not an opportunity risk. It's an execution risk. You get it? And therefore, the balance of assessment is how do we know that each firm has the execution plan ready to get to where they have to get? Are they able to do it well? Are they able to do it with speed? Are they able to do it with scale? Are they able to do it with new mindsets? That is really the question of the day that all of you need to ask. So I'm hoping that today you will hear from our team and it'll give you some reassurance that we are on the right track. Thank you very much.
Thank you, Nandan. For our next session on the AI services opportunity, please welcome Salil Parekh, Chief Executive Officer and Managing Director, Infosys.
So good morning and welcome. I think with that session from Nandan, I'm sure you have a lot of clarity and a vision of where the industry is going, where AI is going, and what are the real issues that one needs to look at. I want to share in the next few minutes where we see the opportunity today in AI services and how we are planning to go after it. In fact, already how we are going after it, and give you examples of that. So first, one of the things we've learned again and again is what we see from our clients is that our clients trust Infosys in driving and delivering AI work. And throughout the day, we want to share with you several client examples. Here are a few quotes. The first one from the CEO of a large telco where we are doing extensive amount of AI work and how he sees the value that Infosys brings. Another one from a COO, another one from a CIO. And these are the sorts of examples that drive how we have built our approach, how we are executing on the AI journey. So today, we are doing AI work for 90% of our large 200 clients. So this is not something which is just here and there in pilots. In terms of the scale, it's across many things. It's small and large parts of large programs with large clients. What we have now done is introduced a way to look at what we are doing through an AI-first value framework. And this framework we are putting together in this hexagon, which I will share in a few minutes in some detail what we are driving through with it. We essentially see 6 large areas where there's growth opportunity for AI services. And I'll go through this in a little bit. We will also have each of our different leaders from their different perspectives give you specific examples in each area. First, AI strategy and engineering. This is really the area where we do a lot of strategic work. You will in fact see one of the client examples I shared where a CEO is engaging with us. There are several others we will share later. And you will see some videos of this as well. So we are doing a lot more AI strategy work. Infosys is a lot more engaged at that level because AI is central in that sense to all of those conversations. But the building of agents, the orchestrating of what the platforms are, what the agents are, which are agents which are built by Infosys, which are agents built by clients, which are agents built by third party, and how to make all of that come together. Second is data for AI. Data is absolutely critical, as I'm sure most of you already have seen. Each large enterprise is protecting its data. No one in the enterprise world, unlike in the consumer world, is sharing data broadly with the AI foundation models. Everyone is building their own data, and there's a lot of work to be done to make enterprise data ready for AI in this new era. The third is process, where a lot of business process that exists today, whether it was technology enabled or whether it was not, is being driven by agents into new worlds. One of the biggest areas we see here, of course, is customer service. And the customer service business case is driving huge change in how process is going to change with the AI world. The next, again, you heard from Nandan, the legacy modernization piece. This is a massive, large opportunity that we are seeing. In addition to customer service, one of the largest opportunities, where we are essentially taking large legacy organizations. We'll actually share a couple of examples of this, of the work we're doing at scale, and bringing them away from the legacy landscape into the modern landscape. Physical AI is something quite new, where AI software is embedded into devices, and that is becoming a growth area because everything will have AI built into it. And then AI trust, which is both about the trust and cyber, but it's also about responsible AI, which is something where Infosys is leading in making sure that things are built with a view to keep responsibility in mind in the scaling of IT systems. So these are the 6 new areas that we are seeing. This is a large opportunity set, and this is where we see a lot of the growth coming. Now, here are some examples of clients we are already working with. Throughout the day, in a little bit more depth, each of the leaders from Infosys will share 1 or 2 client examples. We will also have some videos to sort of have the client share from their perspective how Infosys has supported them in this AI journey. So what I'm showing you in the hexagon, in the AI value framework, is not theoretical. This is things that are actually happening on the ground with Infosys. This is what we are executing. And this for us today represents 5.5% of our revenue in Q3. And it's growing at a robust pace. And this is something which is extremely dynamic. It is something that is working extremely well with our clients. Now, this at the high level of 6 big blocks is something that we have as a visual of hexagon. But within the company, we then break it down to 30 offerings. And then those get broken down to 100 sub-offerings. And each of those are things that are being enabled with our engineers and with agents, built on Topaz, which we will talk a little bit more about later on, and with partnerships. You saw one of the announcements this morning, but we are working with each of the large AI players in very close coordination to make our clients more successful. And all of this is the way we are now going to our clients. So each client discussion today is focused on the hexagon plus the 30 plus the 100. And what is it that we can now work with you as a client executive to make it real for you, the AI benefit, whether it's for revenue growth, whether it's for cost optimization, whether it's for innovation. So our entire go-to-market team, all of our segment leaders, all of our practice sales leadership are working with clients with this format to make sure that the AI becomes more and more embedded into the work that we're doing with clients.
All right, that's the word coming in from the CEO, Infosys. We'll keep getting you more updates on this investor meet, which is focusing on AI. For now, we'll slip into a short break. Up next, we'll discuss the market fundamentals with Rupal Bansali of Double Duty Money Management. Stay tuned for that conversation. Welcome back. You're still tuned into Trading Hour. Markets have recovered a tad bit, and we have been getting a lot of commentary on AI at the AI Summit and Infosys AI Day as well. But what's happening with markets? Let's discuss some fundamentals as well. Rupal Bansali, founder, CEO and CIO, Double Duty Money Management, is joining us now. Rupal, good morning. Thank you so much for joining in. And interesting times. We've been talking a lot about AI, how it has impacted the IT services stocks, and generally whatever we've been seeing in the last couple of months, it's a lot about geopolitics. How do you view India in that way?
So I think AI is actually a huge question mark in my view. I think it's going to be far more binary than bankable going forward. And I think India is actually not well placed potentially from that standpoint. From an investment standpoint, though, I would much rather own companies that are AI resilient than AI victors. I think that trade is behind us. So, for example, if you think of Latin America, commodity exporter, AI is not going to grow wheat. It's not going to unearth copper. and I think those sorts of things are more bankable. And those markets are very cheap. So I know that's not really talking about AI per se, but I think actually AI is going to have very far-reaching ramifications. We don't know how to handicap it. I don't want to pretend here to say that, we know exactly how it's going to shake out. I mean, the market's going to be very volatile in terms of winners and losers. So I'd much rather just sidestep the whole trade.
Okay.
And focus on what's resilient from AI rather than winners and victors and victims.
So you're not bearish or you're not bullish on the AI theme at all. It's not something that you're looking at all. But do you think that will continue to be a risk for Indian markets? The way these stocks fed in the last couple of weeks, what is now the attraction point for, say, FIIs or investors to buy into India?
I must confess, I'm not convinced that India is a buying opportunity. I know the markets have been weak for a couple of years. I know that, the Indian market certainly feels, Indian participants in the market feel it should go up. But markets don't go up because you want them to. They have to go up based on fundamentals and valuations. And to the extent that you ignore those two things, you're going to be kind of challenged. And, the last 2 years, we've seen a lot of earnings downgrades in the Indian market, which is quite astonishing. Because the prior cycle, we saw a lot of upgrades. And so when you have downgrades and you've already paid up, for a very rosy outlook, then you have a valuation reset. I was just checking the valuations of the Indian market. I mean, even despite the correction in the mid caps, the Nifty, etc., has held up sort of relatively okay. But in the mid cap space, you're still looking at 31 times trailing earnings. People are forecasting 23 times, but all of these are very punchy multiples. So you really need to have the underlying fundamentals, live up to those valuation expectations. I fear disappointment.
Okay.
Rupali, hi. This is Ritu. You're saying it's a bit of a disappointment. You don't really see a big opportunity here. India has corrected, but you say it's still not attractive relative to what you're seeing globally. What will change your outlook from here? What's really missing? Is it valuation comfort? Is it earning visibility? And, in your note, when you say dividends are likely to be the dominant source of equity returns going ahead, are you effectively saying price appreciation is going to disappoint from here on?
Riddhi, you said it all. I can only echo. Look, I'm an independent thinker. I'm a contrarian. Does not mean I do the opposite of what everybody else does, but you have to have an independent point of view that you can validate. And I think for the next decade or so, you see, the last decade has been a lot about price appreciation. And that's kind of, what's really driven the returns of the market. I think the next decade, dividends are going to take on the larger responsibility, the center of gravity. And remember, over the 250-year history of stock markets, which you all sort of like to quote and talk about the high returns, a very large portion of those returns have come from dividends and reinvesting those dividends. So I think the attention has to skew towards dividends. In fact, it's something that's available all over the world. Sadly, not much in India. The Indian stock market has a dividend yield of about 1.2%, whereas some of the portfolios that we manage, have close to, 6+% dividend yields. Now, I'm not saying that, that's the only thing to consider, but I do believe the baton is going to be shifting to the dividend yield strategies. And I think they also act as a buffer, to the extent that markets don't perform, you can count on dividends. Dividends tend not to get cut that much. They tend to be far more stable. Again, provided you do your homework, it's not all dividends are not stable. But I would say, yes, that's a very big call I'm making. The global markets, there's a lot of opportunity from that vantage point.
Rupal, you've been championing non-consensus investing as sort of the only way to deliver outsized returns and what we're seeing globally today. But what we see is most allocators looking into crowded growth and momentum trades. So, where is this non-consensus opportunity, if you can spell out for us? You spoke about the AI resilient trade. Where exactly do you see that in India?
I don't see it within India. This is the challenge. I'm a global investor, so I can cast my net very wide. I would actually argue, like most investors in the world, there's a home country bias, right? Indians want to invest in India. That's where the bulk of the money is. I would actually make a call for diversifying and, frankly, looking at opportunities abroad. And I think Indians are able to invest abroad. The question is of taking advantage of that opportunity. Unfortunately, a lot of Indians, when they do invest abroad, they invest in the US market. That's true of course, global investors too. I'm actually quite bearish on the US market as well. I actually think the markets internationally, whether it's Europe or Latin America, it's not the conventional answer you'll get from most people. I'm sure, people are favoring, for example, Japan all of a sudden is a flavor of the month, of the year. And frankly, going forward, I hear a lot of investment appetite for it. I'm not bullish. You see, the reason to be non-consensus is not for the heck of. It's a very dangerous thing to just do the opposite of what everybody else is doing. You better be correct. But I think what is important in markets is that the consensus is already in the price. So if you want to beat the market, you better have a non-consensus point of view. That's the nature of markets. And so Japan, for example, so much optimism because of the election, the new regime over there politically and economically, interest rate-wise, so much has been priced in. I actually fear there's a setup for disappointment. On the flip side, you look at Brazil, where people are so worried about the politics. They're so worried about, the currency. And frankly, the politics are improving. The currency is more set for appreciation than depreciation. So what is perceived to be a source of risk could actually be a source of returns. So my non-consensus point of view is that you should always look for opportunity where others are not. There's always opportunity to be found in global markets. Again, my remit is very large, so that sort of, allows us to be very discerning. And I think the Indian investor is able to go abroad. They just need to think differentially.
Okay, so in that case, you spoke about Brazil. What are the other international markets that you think are doing well right now and they should be on Indian investors' radar as well?
This will sound very counterintuitive because, another country that is totally out of favor is France, right? The French politics are pretty bad, the fiscal deficit, elections, all the stuff, the backdrop. And Europe is viewed as such a has-been, in terms of people's perception. And yet France has some amazing companies. You look at, in the last decade or so, stocks like Louis Vuitton, Hermes. These stocks have doubled to quintupled, okay? That's amazing absolute returns to get. And less well-known names like Schneider Electric. It's actually a play on data centers. It happens to be a French company. But if you're not looking there, you're not going to find it. Safran, it's an amazing play on air traffic growth. All of us want leisure travel, short-haul flights. Narrow-body engines, Safran makes those engines. That is a way to play. This stock is, again, quintupled over the last decade. GTT, which is the NVIDIA of the engine inside an LNG tanker. Post the Ukraine war, you have to ship oil because the pipelines, are obviously not operating. And even India, for example, when you get oil from far off places, it's LNG tankers. There's only one company in the world that really makes these, I'm going to call it the engine for these LNG tankers. And the volume demand for it has exploded because, shale fracking in the US, people want to export, right? There's so many gas terminals being built. These are very bankable ways to make, I would argue, it's an opinion, when I say bankable, there's no guarantee in investing, but you can see the line of sight of these things growing. There's only one company so everybody's looking at NVIDIA for AI. Look for the NVIDIAs in other parts of the market. It happens to be a French company. Roughly 12 times earnings, a 5% dividend yield, a strong balance sheet, net cash. This is the kind of opportunity you can find even after markets have soared all over the world over the last 15 years. You just need to open your eyes and be a non-consensus thinker. I will just argue, that's my job, right? I have to find value and not sort of lament that there is no value in the US market or the Indian market.
Okay, so that was very interesting. I tracked the energy space and I never knew about this, so it's very good to know, learn something new. But quickly, before we let this interesting conversation go, what will make you bullish on India from here on? Are you expecting it to correct further, reach a certain level of valuation, or see more earnings recovery come by?
Look, I'm actually most enthusiastic about Modi's plans to reform the labor market in India. I think any country, if you look at the genesis of sustained GDP growth, for a while you can sustain it with infrastructure spending, with deficits, all sorts of things, can happen. It happened in China for a long time and, then it reset. But ultimately, if you need a country to be on a very stable footing, the people have to make money. And, the spending cycle has to continue, the saving cycle, the investing cycle, right? So job creation. So labor market reform in India, I think would be a game changer. And that's something that would make me very bullish. Okay, take that point. A pleasure speaking with you today, Rupal. Thank you so much for joining us in the studios and telling us what you are bullish on, the contrarian trade that you speak about. A lot of learnings. Thanks a lot for joining in today. Thanks for having me.
With that, we'll slip into a short break. On the other side, we'll discuss markets and stock-specific action.
Welcome back. The markets have made a smart recovery in the last half hour of trade. The frontline index is now up almost 50 points. You also have the bank Nifty that is up 180 points as we speak, but the recovery was led by the IT pack. That's up about 2.5%, led by Infosys. That stock alone is up more than 4% as we speak on the back of some of those comments coming in about AI being the next big opportunity for Infosys to track. We'll continue to track that and markets, but for now, Sonal and I will take your leave on Trading Hour. The team of Halftime Report will take all the action forward.